With equities trading flat, FX markets are increasingly where macro developments are manifesting themselves. So let's see what the experts are buying. Larry Shover, Chief Investment Officer at SFG Alternatives, joins us live. Larry, great to see you there as always. We love hearing from you. Let's start with this FX space at the moment and what you make of it, because there's certainly been a lot of movement. What have you been trading over the past few days?
Well, I'll tell you what, traders behind me are definitely on high alert. I mean, just the amount of headlines that have come across the tape. And keep in mind that currency traders have had nothing to talk about. Volatility has been so low for so long, and all of a sudden we're seeing a huge divergence in volatility and in trading. We saw a 170 BIP range in the Japanese yen overnight to today. Traders are worried. They're worried about, the big currency war, but I do believe a lot of this is headline risk. I mean, I think they're all worried about the G20 meeting on the 15th and maybe not seeing the forest through the trees.
Yeah, do you think this volatility in the currency space is going to continue? Because we've got money printing that's going to continue, so I guess policy decisions and headlines surrounding that aren't going to stop now.
Yeah, I do think the volatility will persist, and typically in any future or interbank FX asset class, when headline risk starts driving volatility, it takes a while before people start getting numb to it. They realize after a while that they're hearing the same thing over and over again, and then it will settle down. I mean, at the end of the day, right now, I do not think we're going to have a single country currency war. What's going to happen, though, is that I think the countries are starting to find out where the currency needs to be to remain competitive in the world environment. So I think it's a lot more about headlines and a lot less about what's actually going to happen.
In that case, I guess we can expect some perhaps radical moves ahead of this G20 and afterwards. What do you think?
Oh, I'm sorry, Kate, I missed the question.
That's okay, Larry. I was just asking if we're likely to see some seriously big moves surrounding this G20 meeting.
Oh, I'm sorry. Yeah, I think we're going to see some tremendous moves. Just like I think of 24 hours ago, last week, like the Japanese yen basically closed flat on the week. But when you look at the intraday moves that it had and ended up, the 80 BIP rally on Friday, it was tremendous. So I think the intraday swings are going to be really, really profound. However, I don't think we're going to have any kind of sustained movements until after next week.
So have you been in and out of these currencies over the past couple of weeks?
Well, I'm very fortunate in that we have a lot of currency exposure. However, most of our currency exposure is micro-focused. So we're arbitraging, we're in and out on a second-by-second or day-by-day basis. We have very small long-term trend following based currency traders in our portfolio.
Okay, let's talk about this State of the Union address tonight, Larry. You've got Barack Obama, the US president, giving this address and this speech to the nation. Is the market expecting much from this? Is it going to be critical?
Yeah, I don't think the market's expecting much of anything, because I think what Obama has proposed, he's already laid out. However, there's a little bit more news, like on the back page of the newspaper, that people really are dismissing, that Obama might in fact use some executive action authority that he has, not going through Congress, on something perhaps to address refinancing for the 11 million individuals in the United States who just cannot get lower rates on their mortgages. That's a big problem, and I'm not really sure how that's going to affect the market's perception if Obama pulls that out tonight.
Okay, finally, have to ask you about this talk surrounding a breather. I know we talk about it a lot. We've probably talked about it with you over the past couple of weeks, Larry, but it still hasn't materialised. There hasn't been a breather or a significant correction. Are you still seeing one in the near future?
Is that for the stock market?
Yeah, that's right.
I'm sorry, Kate. Yeah. No, I think right now we're going to be in a standstill with the stock market, and here's why. When we look at the S&P 500, the top-down earnings per share estimate was about $107 to $110 per share. That's what people are assuming, and they're getting very cozy with. That would translate into about 14 times valuations for the stocks. That would get the S&P 500 between 1,500 and 1,540. Unless our growth unless we start seeing bigger growth metrics come around the corner, we're going to have the Empire survey coming out on Friday. Unless we start seeing some dramatic upswings, I just can't make a case for the stock market to continue to go higher without growth metrics in place.
Okay, Larry, thanks so much. Appreciate your time.